Strike, strike, strike. Everywhere you turn, you are seeing strikes, you are seeing disgruntled employees, you are looking around the world and seeing the same information. But why is this happening? It's all connected to one central point, and we're going to bring that up today. In this video, we are going to look at what's happening, and then we're going to understand why, and then we'll talk about what you, the individual, can do. Sound good? Let's begin. Here we have it. Right now, private payrolls rose 89,000 in September, far below expectations. They were expecting things to be so much better, and no, they were not. Of course they're not. You've got problems structurally, fundamentally, that are not going to be resolved simply by giving one or the other. Let's throw some cash here, let's throw some cash there. That doesn't fix the problem. There's something else going on. Well, right now you have healthcare workers picketing outside US hospitals in multiple states, kicking off a 3-day strike. Here we have more than 75,000 workers at hundreds of Kaiser Permanente health facilities across the US. This is going on. But we've seen it in many other places. It's not just this one example. Yes, we had the UPS. We had the United Auto Workers, one after the other. And what is the deal? Why is this happening? Well, you probably have seen it yourself if you've been on this channel. But there was a big change over the last, let's say, decade plus to what we're seeing today. And what is that? Do you know? I think you do. It is absolutely the easy monetary policy going away. And so what we have is this unbelievable rise in debt that has been going on. Debt in terms of the total number of debt, but actually the interest payments. And so when you have that, when you're more of the money, whether it's for an individual, a corporation, doesn't matter. When we have more money going to interest, it's not going to productive means. And so that robs the real economy. So your friendly neighborhood, restaurant, let's say, is not getting the money it did before because it was now going to debt repayment. And do you see how that could slow things down? Well, there's more to it than that. Right now, it is very clear that the economy is much weaker than we are being told, and I've got some information on that. You could see higher rates have clearly, there's no question, it is a negative impact on the economy as a whole. You increase interest rates, you slow things down. That's what's needed because the inflation was too hot. But still, stocks are near a record high. Real estate is near a record high. What they are doing now is not nearly enough to actually slow real inflation down meaningfully. Less available disposable income creating that slowdown effect. Okay, so we're seeing that going on right now. The share of US adults with decreasing incomes has ticked higher in recent weeks, another sign that the labor market is slowly cooling. You're not going to see that necessarily in the unemployment rate, although I do have one statistic. If we get unemployment to fall below 4%, check, and then it rises above 4%. Let's say it gets to 4.1%. Historically, every single time, that means we enter a recession. So it has to fall below 4%, come up above 4%, a recession follows. And where are we right now? We're inching closer, even on their own U3 unemployment statistic. I mean, that's the most manipulated one, and yet that's where we're at. Okay, so we'll see if it happens. And again, yes, that's just another indicator. We're looking at these things. I get it. That's not the be all end all. It's one thing, but it's very accurate. It's like the yield curve. It just happens to be very accurate, whether you want to focus on it or not. Anyway, here we go. And you have the poll pointed to a slowdown in business activity, with the share of workers who reported working over 35 hours falling to 46.7%, lowest since 2021. And so a lot of people, they want to be working full time, they want to be getting more hours, but they're not. And so yes, they're employed, but they're not getting the income. That's all ultimately what it comes down to. Look, these numbers, they mean a 46%, 22%. It doesn't matter, okay? That's going to change tomorrow. You look at these stats, it's different tomorrow. What's important is that people have less money than they did before, less disposable income, less that can come towards you, the business you work for. Maybe it's your own business, whatever the case may be. If there's less money floating around, less liquidity, less can go towards you, one way, shape, or form. All right. You could see more Canadians are in the middle of a financial stress emergency as they struggle to keep their heads above water amid high inflation and interest rates. The number of people under financial stress has grown 20% over the last year, making up 37% of those with jobs. You've got a problem that's going on in Canada. Obviously, this was very easy to see it coming when you've got an extreme circumstance with the real estate and then gasoline was poured on that fire through 2020. People are struggling. People making $200,000 plus are struggling in Canada right now, and this will not let up anytime soon. So you got to be aware of that. What do? We are in an inflationary world, and that's where we're headed towards more of. Can you believe that? That's the deal. So I want to show you some other things. I'm just trying to show you, yeah, it's in the US, it's Canada, it's UK, it's everywhere. Let's talk about debt. What about this? Mortgage demand drops to the lowest level since 1996 as interest rates head towards 8%. It's not something that should surprise anybody. More mortgage applications are being rejected for insufficient income. Wow. Here we go. It's starting to happen. Now, this is good because it would slow things down. We need everything to slow down except for wages. However, we are encountering a very big issue at this time. People are waiting for those interest rate cuts to come. I'm just not sure they're going to come fast enough. All right, that's the issue. 1 in 5 student loan borrowers are at risk of struggling when payments resume, which is right now. And of course, we don't know how this, it's too many steps in the way, but I can tell you right now that people are hoping they're on this list, and that is the government canceling $9 billion in student debt for 125,000 borrowers. I looked through that. It's people with disabilities, it's people with, some sort of hardship, and so they're canceling that. The $9 billion, though, on top of the rest of this, of course, means that the average individual, the taxpayer, will be paying that, right? It's not as if it just disappears. Somebody's got to pay the bill. And so that means that there's more on top of the deficit, the debts that are rising considerably. It looks like for a lot of people, they're just going to have to deal with it now, or they're going to have to deal with it later. But that's the world we're in right here today. U.S. effective rate of interest mortgage debt outstanding. Just looking at the comparison between mortgage rates and just trying to see that the amount of debt, I think, just incredible. There's no question. But in general, you got a higher level of the expense, and so that means that people are putting more towards that instead of what I would call productive use. And those are the mortgage applications declining as well. Okay, so you get the point. I think it is pretty clear. But when you add on top of that the factor of OPEC and what they have said, basically we are not going to go off of our plan to keep the production cuts. And so what does that mean? That means less supply, potentially keeping prices of oil elevated. That means your gasoline prices, that means your transportation costs are going to remain higher for longer. And so all of these things point to a slowdown, and yet shelter and yet energy and food prices and everything else could remain elevated. What does that mean for you? What can you possibly do? Well, you've got to take action today. There are a few things right here that I'll mention, but there are 1,000 more. The point is, take action. Take your foot, step, and make that happen. That's really what I do in my personal life whenever I'm struggling with something, whenever I'm trying to get somewhere. When I started my businesses, I didn't have somebody to ask. I don't know what to do, but I just, all right, let's do it. And I just went head first into it, made a lot of mistakes. bouncing off the walls, but eventually, going straight, bouncing off here, bouncing off there. But I made it. I made it to where I needed to be. And that's because I am relentless. Are you relentless? Are you relentless? Let me know. Sell to people and work to build a business that operates in any condition. So no matter what the circumstances are, there are businesses that just operate. Maybe they're not as good, or maybe they're doing even better during the difficult times. And you've got to be that person that goes and does that. That takes a lot of work, I understand. Look for yield producing assets to make up for inflation. And so during these times, a lot of people are just sitting on their hands and they're kind of worried about what should I do? Well, there are assets out there right now that could give you some of the yield on some. Maybe I'm not saying you throw everything in, but you don't want to be losing out to inflation too much. It's been going on for a couple of years now, right? Price of oil is a must watch. Watch the price of oil. You're going to know what's going on in the economy. If it gets too high, that creates another slowdown. And generally, businesses are watching the price of oil too. Transportation costs, everything is connected with that. So pay attention closely. I'll show you here on the channel, of course, but in your own time, definitely do so as well. So before we get on this, if you haven't already, I just don't know why, but you got to hit that thumbs up button. Clicking that, literally just clicking one button is going to help this channel and also others out there who need to know about this channel. So I do appreciate that very much. If you're like, what do? I don't know. I just can't figure it out. You've got to get some advice. And I can't give financial advice, but that's why I have hooked up with this company and they do that. You get it for free. That's the crazy part. You get a 45-minute call for free with Money Pickle. If you're interested in that, the link is in the description. I've put all the information you need to know, including this little video here. Just click on it, watch it, see what you think. I specifically spoke to one of the top guys there, and we're in constant communication. I'm just constantly looking for feedback as well. Okay, so you give me the feedback, let me know how it went, and I want to hear from you. Okay, here we go. Comment of the day. I want to thank you for this. Protect your assets. Truth crew. Yes, that's right. You got to protect yourself. How do you do so? You've got to make sure you know where all your income is coming in. You've got to do these things like I talk about in Compass, my free program, where you, the individual, are going out there and actively, number one, investing in yourself. Every single day I'm reading or audiobooks. I do what I can. That's number one, because I'm going to constantly learn about new things. And yeah, it happens to be a business expense. At the second thing you got to do is you've got to understand where your money is being kept. Is it in the right place? Well, you tell me. All right. I want to thank you for being here today. Just one thing on the way out, you definitely want to let me know what you think. Okay. Let me know what you think. Very important stuff to share what you believe is going on inside this economy. I want to know, and hopefully I can feature you in the comment of the day. I'll see you in the next one. Take care.